So markets in positive territory today. And again, thanks to a lot of the positive news coming through from Europe. We've seen this picture playing out before, though. Is it sustainable?
Look, yeah, of course. Of course, the market's up on the back of that Greek austerity measure that's been approved. As you said as well, and as we all see on TV, the Greek people are not very happy rioting in the streets. Everyone would like to see that settle down. There's also been a lot of harsh words said about Merkel as well as the IMF as to why they're doing the steps that they're doing, and perhaps that they're kicking down the road, the can down the road, and not really solving the crisis. And what could pan out, they say, is a similar situation to what happened in 1929 when we went into a depression stage. So it's quite interesting to note that, but still markets are trending higher. A lot of momentum behind the markets and a lot of appetite for risky assets globally, hence why the rand has been so strong as well in emerging market currencies, and really just market momentum lifting the market higher.
Well, let's just look at some of the numbers as well. I mean, we had Anglo Platinum out with results today. We know that they're starting to bring down the production numbers going forward because this platinum price is just not strong enough. It doesn't make economic sense for the company. Resource companies on the other end are starting to look slightly stronger. Which is your preferred commodity at this point, Daniel?
Well, look.
With platinum be it, because I mean, last year they had a bad year.
Yeah, look, in terms of platinum having a bad year, they had 81 safety stoppages last year, which was double the amount that they had in 2010, which put a big dampener on their output, and they expect output to be unchanged this year versus 2011 reporting period, so not too good on the output front, perhaps demand not there. Having a look at the platinum price, it has come under pressure along with the gold price. It's one of those commodities that is considered a safe haven as well along with gold. And in times when markets money is coming back into riskier assets, people tend to sell gold and platinum and put it into the market. But look, Amplat's results, I think, they're slightly disappointed the market. They earned R13.65 a share. They're expected around R15 a share, so somewhat slightly below analyst expectations.
But Anglo Platinum is up 1.6% today, though.
On the back of the whole market, though. When the market's trending, the whole market will generally move higher. We've seen that many times in the last couple of years. Often markets are irrational, and the stocks can move higher with the rest of the market. But our preferred pick in the sector, in the platinum sector at the moment, is Impala Platinum. We send it out on stockalert.co.za today as well. At current levels, trading around R167. Our target there is around R176. It's about a 5% move to the upside, and our stop loss on the Impala Platinum trade is around 162.50. So it's technically also forming quite a nice support technical level, and at the moment at current levels we prefer Impala Platinum to Anglo Platinum.
So let's also just take a look at Anglo American. That is up almost 3%. In fact, on the top of the top 40, sitting here at R342, Daniel. I mean, looking at the diversifieds, Anglo American relative to BHP Billiton. Do you have a preference as to which stock you would be investing in?
I like them both, and there's so many questions that people ask. Which one should I own, Billiton versus Anglo's? Billiton's has got an oil component, whereas Anglo's doesn't have an oil component. And also Anglo's is more precious metals. So, it depends really what your preference is. I would say hold both, unless you have a Sasol in the portfolio, for example. But both of them at the moment are trading at PEs of between 8 and 9. So in the short term, they're somewhat slightly overbought and had quite a big run up in the last couple of months with the rest of the market. But in the long term, at current PEs and forward valuations trading at around 9, current PE around 8.59 on Anglo's and Billiton's, somewhat still cheap for the long term, but as a short term, in the short term, probably slightly overbought with the rest of the market. So look, at current levels, also the whole market, 34,500 in the all share wares resistance. We were there last week. That's where resistance remains at the moment, and only 500 points down from that. It's still, a slight consolidation or a slight pullback. It's again one of those scenarios you've got to buy the pullback. All
right, so let's touch on Group 5. Talking of a pullback, I mean, this company saw diluted headline earnings per share falling 44%. This is a construction story. Last year we had a lot of people that were very optimistic on construction. Do you think that now is the time? Is it still too early?
I've come on this show many times with you and on Hot Stocks and other programs and said that I like the construction sector.
Do you like
haven't
Group 5
liked
though?
it. Look, it's one of the medium-sized construction companies. I would rather go with the Wilson Bailey Homes. It's got the best management, but I also like Murray's and Aveng. It's not that I love the construction sector, but at some point, and I've said this many times, that at some point it has to be a buy. These cycles turn, and also Zuma last week said that in the State of the Nation address, they're investing a lot of money into construction, and it should bode well for the construction stocks. The likes of Group 5 said that they're going to be looking at a lot of the government tenders going forward. So
do you think government is actually going to drive the construction sector as opposed to private sector spend? Because that's where we've actually seen a lot of depression coming through.
I think largely, yes. I mean, having a look at Group 5 as well, seeing that we're discussing them, they've got an order book of 10.3 billion, which is up on last year's about 9.6, if I remember correctly. So, and they've got 37% of their order book coming from outside of South Africa. So, in terms of government spend locally, yes, I think it will be quite key for all the construction sectors, or all the construction companies to get quite a lot of their order book filled. But some of that is starting to move out of South Africa as well, because there are a lot of opportunities still out of South Africa that are untouched, and being the size of the South African construction companies, they need to go into those markets.